How's it going, everyone? So today I'm going to be talking about recession-resistant industries. And in addition, I'm going to be covering a couple of stories. So the first one is in which freetrade has a new brokerage platform, and we're going to be discussing all the positives there. And also with the continuous issues with coronavirus, I'm going to be talking about the issue of face mask shortages within the dentist industry. So you may be wondering, what exactly is a recession? And at a very basic level, it just means that there is a general decline within economic activity. And the way it's measured is when there are 2 consecutive quarters of economic decline. Now, you're probably thinking, why do people say 2 consecutive quarters? So a quarter is just one of the 3-month periods. That can be either January to March, April to June, July to September, or October to December. So you could have a situation where in, say, January and February, there is growth within the country, but then it slumps within March. And then April and May could also have a growth period, but then it slumps again in June. By definition, a recession would have taken place. But broadly speaking, within a 3-month window, if there has been a decline, and then the following 3-month window, if there's also been a decline, that would result in a recession. And it just means that the economy is doing bad relative to how it was previously. So when we're picking recession-resistant companies, we want to understand why it is that these companies are less prone to the impacts when a recession does arise. So let's look at our first recession-resistant company. So ticker symbol CL is a multinational company. It's headquartered in the States, and it focuses on distributing household-based products along with health and personal care as well. Now, Colgate is notorious for their toothpaste. It's one example product. And so when we think about when a recession takes place, all these household consumer-based items are still needed. And so everyone hopefully cleans their teeth and they require toothpaste to do so. And so that's just one small product that this company helps to distribute. And so the demand pretty much stays constant, even when there is a downturn within the country. So switching over to Seeking Alpha, we can see some of the stats, and the dividend yield is at 2.26%. Now, that's not exactly super high, but what we're building towards is adding to our existing portfolio and building in certain companies that will stay constant and help protect against any losses that we may incur during the recession period. And so with my portfolio, for instance, I have a lot within the retail sector, and all those types of companies can struggle during recessions. So it's generally good practice to be exposed to a range of industries, but be selective within those given sectors. And we can try as best as possible to mitigate against any forms of downturns. So that is the first company I wanted to talk about, and the rest of the companies are very similar. They're all consumer focus based companies, and so without going into too much detail, let's just look at the other picks. And for anyone that wants to just speed forwards, you can see the companies I'm going to be talking through on the left hand panel here. But the next one is Walmart. Now, I actually purchased using the fractional shares option on the Train 212 platform, so I basically own half of a share in Walmart. But Walmart is another good example of a recession-resistant stock. So using Seeking Alpha website, we can see we have a dividend yield of 1.83%. So a little bit lower compared to the previous stock, but it's important to diversify even within the sector. And that's because there is no company that is full recession resistant. It's simply not possible. But what we're trying to aim for is companies that are not really affected by disposable income from customers. A lot of people in the US shop at these types of companies. There's others as well. And it's still a useful company to have. Okay, so let's move away from the US market, and we have a well-known UK-based company, and that is Morrisons. So again, I also purchased a really tiny amount of the stock, so 1.5 units. we can see the performance actually hasn't been too well in recent times. And if we zoom out, we can see we've hit this sort of local minimum drop, and it felt like a great time to buy into the stock. And although Seeking Alpha doesn't have UK-based stocks currently, I can confirm that the dividend payout is at 3.82%. So I really like the dividend yield. I like the fact that the stock was a great time to buy. And although I only brought a small number, I'm definitely going to be adding to my position in the near future. And so that leaves me to talk about the last recession-resistant based company. And no doubt there's a whole range of other companies out there, but I just wanted to pick 4. And so that company is Unilever. It's a British-based company and I believe also Dutch. And they're exposed to the food, beverage, and also beauty-based products. Now, the dividend yield is actually nice as well. It's 2.96% currently. And for me, it was just a no-brainer to have this within my portfolio. And so I just brought 1 share of the company currently. I will definitely be adding more to my position. But given that I focus primarily on dividend-based companies, I wanted to focus on companies that still issued out dividends. I wasn't looking for the highest values, but I did want them to have that protective nature in the event that a recession happens, whether it's tomorrow, next year, or 10 years from now. These are still companies that I'm happy to have added within my portfolio. Out of the 4, I would probably say Morrison's is the most volatile, but their dividend payouts are the highest, and it wasn't at an extreme level, such as a 6% dividend payout or higher. So overall, these companies tick the boxes for me. So feel free to research into recession-resistant based companies and let me know if you have any other companies that you think are worth exploring. Okay, so let's move on to some news now. And the first topic I want to talk about is related to the dentist industry, which is connected with the NHS in the UK, and the shortages of face masks within the healthcare industry. So everyone's aware of the coronavirus. It's definitely become a lot more serious than when I first spoke about the topic. So without going into all of the details within this article, NHS-based dentists are now restricted to ordering just 100 masks a day. And so for the larger dentists out there, they're actually running out of suppliers. And so while there is what's referred to as a central stockpile, it's been difficult for these dentist practices to actually buy any more face masks. So that's actually quite problematic given that dentists have to wear face masks. But this problem is more of a supply issue. So the UK buys the majority of these disposable masks from China. And of course, with all the problems that the coronavirus has caused in China, the prices have, as a result, tripled since January of 2020. So it references here that the reason why the supply has gone is due to panic buying. Now, I'm not sure about you, but if I was living in China, I wouldn't see it as panic buying. I would see it as a necessity. And so the comment that BDA, which is the British Dentistry Association, it's a very narrow-minded comment, given that China does have other suppliers that manufacture a whole range of masks as well, along with other private companies as well. So I personally wouldn't say that panic buying is the reason for the price increase. I just think it's a situation that where individuals in China need to be wearing masks to protect their health. So that's all I wanted to reference from this article, but it does highlight some interesting points. So on the news in the UK so far, there's been a lot of high-profile individuals that focus on diseases, and there's constantly been this undertone where those that live in the UK do not need to be wearing masks when going about their day-to-day business. Now, for me, it seems very strange that there's been a lot of reports stating that wearing masks do not help prevent the likes of the coronavirus from spreading. And I just simply disagree with that thought process. Because in the worst case, if you are wearing a mask and let's say you're wearing it incorrectly, well, what I would say is go watch a YouTube video and learn how to put on a mask. But regardless, even if the mask isn't helping with the spread of the coronavirus and other diseases in general. The worst case is that it's no different from not wearing the mask. And so I can't help but feel as though all these comments from high-profile figures are because they are aware of the shortages situation. So we've got the shortage situation within the NHS dentist industry, and I assume that affects other NHS practices around as well. But from a consumer level, everyone's been told not to worry, don't bother wearing masks, they don't want to cause mass panic, but realistically there shouldn't be any panic involved. It's just a form of protection, and if we had the supply, which we do not have in the UK, then I personally would advise people to wear a mask just as a base level form of protection. So I know I'm hard on the UK, but I feel as though we need to be critical on these types of situations. I personally feel as though the UK needs to solve this face mask issue shortage very quickly for the NHS. I also think there should be an option for consumers to go to their local stores to purchase a mask should they want to wear one while walking around in public. And if there is one benefit from the coronavirus, I would like to think that it would change the behavior within Western societies. So what I mean by that is this coronavirus stemmed from China, but at least individuals from the given country go around, wear the mask. They are protecting the spread of any form of disease from themselves to others, and in turn the mask acts as a barrier for others. And the mentality in the UK is if someone is wearing a mask, then they're seen to contain a virus on them, and it's a mindset that really needs to be changed. So those are my views on this topic here. So I now want to switch over to a little lighter topic, and it's the notification from Freetrade in which a new brokerage platform is ready for some beta testers out there. Quick announcement. Are you interested in starting your own investment journey and want to receive a free stock worth up to £100? All you have to do is create an account and deposit £30 or more. Trading 212 is available for European residents also, so head over to the link in the description. So before moving on, I just want to point out that even though I focus using the Trading 212 platform, for people that watch my channel, it really doesn't matter which platform you use. As long as you are investing and you're happy with the platform, that's perfectly fine. So Freetrade has released a new brokerage platform, and it said that such a system will bring about instant deposits, fractional shares, and a whole range of new stocks. So let's just dig deeper into the article. So for those unaware, Freetrade is a platform, but they've also been working behind the scenes to have their own brokerage platform as well. So the app currently allows you to invest in US and UK-based stocks, along with ETFs as well. So it's mentioned that there's 70,000 customers on the platform with a community of 100,000. So a decision was made to build out their own brokerage platform, and it goes against other rivals which generally rely on third-party software. And so in Freetrade's mind, and quite rightly so, they wanted to have this core piece of technology which underpins the entire platform. What's also impressive here is that they've only had 10 engineers to build out this core part of the system, which they've named Invest by Freetrade. So with that said, what benefits are there for customers with this change in place? So the first one is fractional shares. So I've mentioned this in the past, and this blog post provides the example of Amazon, but I've referenced the likes of Google. And in either case, there are several stocks that are extremely pricey, and you may not have enough money to have full ownership. So fractional shares allow you to own a fraction of a share. Now, I could be wrong, but having your own platform that deals with the buying and selling side, I can only assume that that has really saved a lot of costs. Because opening up the platform to have fractional shares, it just means that more people will be placing more orders, and it's most probable that Freetrade would never have had this fractional shares ability had they not migrate to this new brokerage platform. So regardless of having this brand new brokerage platform, which is just a component that's behind the scenes but enables a lot of changes for customers, there will also be a whole range of new stocks. So it does mention mention thousands more of US, UK stocks and also ETFs. And in addition to that, there'll be European shares, so that's very positive as well. Okay, now this blog post also mentions that premium accounts will be coming. So there isn't much mention on what this entails, but no doubt there'll be an ability for paying members to have more features of the platform. Whether they will be good or not is hard to tell, but it'll be interesting to see how Freetrade plans to make more money in the future. And then finally, faster development for new features. Now there's a lot of feedback within the community, and as a result, there's always feature requests that individuals would like to have. So again, I look forward to any new features that may be available on the platform, and hopefully their life cycle between feature request and actually being feature complete will be much shorter. So what really excites me is the idea of fractional shares. Now, I'm not actually so interested in fractional shares because I've been accustomed to them on different platforms. But where Freetrade lacked in the past was in relation to the additional costs when you would buy or sell a given share. So I really am hoping that with this new brokerage platform, such costs will be negligible. So if someone buys a whole share of a given company, I can only assume that this brokerage platform has made it much cheaper for Freetrade and therefore not mark up the cost when a customer places the order. Now, this could be totally feasible given that they will introduce premium accounts, and so that in itself is a business opportunity for Freetrade to grow the platform. Now, at the same time, they may not do what I hope, and perhaps my thinking is inaccurate, but I really do hope that this brokerage platform has reduced costs somewhere within the company. Now, as for myself, I will still be sticking with the Trading 212. For me, there's no new features here that Trading 212 doesn't have, but it's definitely positive news for anyone that does use the Freetrade platform. So with that said, thanks for watching everyone, and I'll catch you in the next one.